Hello everyone, welcome to this webinar. We're going to talk about moving average spring strategy as always applied. We're going to look at some real trades, try and help you guys. We're specifically going to focus on the short time frames. As before, I just want to check. I don't want to talk to myself here, so can you guys hear me? Can you see me? If you can, please respond in the questions section. So I'm make sure that I'm not talking to myself. From my side, I see everything is working. I see the speakers. It's fine. I see the microphone is working. So can you guys hear me? Can you see me? I get no feedback so far. Can anybody hear me? Can anybody see me? Joel says yes, sir. Right. One can hear me. I hope everybody can hear me and see me. Right. Okay, so let's start. Today's quite a special webinar. Nothing worked out quite like I thought it would today. So we just went with the swings, and I'm actually not in my office at a different place. And so you might hear some new noises, some new sounds or whatever. And but we're going to do this. So let's focus. All right. Okay. It's very, very important for me to keep this real, to always show you, for you to realize that this is real people doing this, real people struggling with this, and it's also real people discovering and finding out how it works, and it starts working and finding the joy in that. Now, the short time frame is very special because when you get to a point where you can actually trade in the short time frames, then lots and lots of opportunities open up for you. Okay, so a lot of people will be able to agree with me there. But there's another thing that you have to realize, that to successfully trade on the lower time frames, you must have practiced a lot. You can't just start and it'll work for you. It's a skill that you have to hone slowly first, and then as you get better and better, then initially the longer time frames, the higher time frames are better because there's more people involved in creating those candles. So so the structure of the market, that underlying structure, is more stable. The shorter time frames, it's different. There's more noise, there's less people involved. So I want to share a short story with you. I train a lot of people. We have seminars, we have workshops. I have people on Skype from all over the world that contact our team and we train them. But also I see some people when I go to the office. Our office is in Johannesburg. We're opening up in Cape Town soon. And there's one gentleman that I want to discuss with you quickly. He's really a clever guy. He works in a field that is very specialized, numbers. He's got a master's degree. He's got 2 bachelor's degrees. He's really, really a clever guy. He's more clever than me with his field. And yet we had an interesting problem. He sees in numbers. I see more visuals. I see the waves and the things in the market. And what happened is over the course of a couple of sessions, I showed him what I saw. I showed him, we explained the foundation, all the stuff, simplify, make it simple. And yet it was difficult. It seemed like he had difficulty grasping the concept. We would look together at the charts. That's the nice thing about Skype. You can do screen sharing. And then I tell him the words, I show him, but it's like there was something missing. So he doesn't see what I see. And especially when he tries it on his own, he sort of like gets lost again. There's a lot of confusion. Yeah, and this caused me to really think a lot and actually pray a lot as well. What is it? Why is it so difficult for him? I thought he would actually, get it sooner because he's clever. I mean, this is really a clever guy. And then I realized a very important thing. There's clutter that is keeping him from seeing what I'm seeing. So in his mind, there's a lot of things that he's learned, and he's really studied books and different theories, he's studied, read books about single indicators and oscillators, and he's got a lot of knowledge. And I realized this knowledge is cluttering. I have to simplify even further. Simplify. And I want to show you a chart quickly. This is This is how the template normally looks of the spring trading, right? So you'll recognize this. This is the one I normally use. So it's very simple. Everything you guys that know about the spring strategy, if you've looked at the first, the first few ones, every single indicator has got a purpose, but we're looking at the price, and yet people get confused. So, and I was struggling with this because I mean this client, he's not giving up. He really likes it. He knows he can do it, but he's actually the clutter is just so much. How can I help this person? How can I help him? And now I'm going to jump to another template that I'm going to show you. Let me just get there. Yes. What you'll see here is I've simplified it to a point where you can't take anything else away. We've got our basic template, yes. We've got our 34 simple moving average. We've got our 15 simple moving averages to guide us. Remember, we said we're looking at the market structure. Right now, this is a 1 minute. I even took the momentum away. And the purpose of this is in trying to help him, I realized I have to get rid of the clutter. He has to realize that without seeing the structure, without seeing the underlying structure, all the other things are just going to confuse him. And that is actually what's happening. In his mind, it's still important for him to use the indicators, but he can't see the structure yet. That is absolutely deadly. And I realized when I scanned through the book, Trading in the Zone, again, any book if you read about the mental process, the way, the mindset of a successful trader, they focus on the structure of the market. They can see that structure. It's only after you can see that structure that the rest starts making sense, that you can optimize them. So what I'm going to do today is a little experiment, and we're going to keep it practical. I mean, this is the purpose of the webinar, is moving average spring strategy applied. We want to apply this. Is to just look at a couple of markets, just 3 that I chose, where the spreads are very low. Look at the ECN account. And to look at a couple of trades, see if we can get a couple of trades, see if we can see the structure and identify a couple of trades, and then I'm going to take it to see to allow you to see how easy it can be if you simplify, if you don't overcomplicate it. And this is where all the things fall together. We've got we've got the foundation, which is applied, which is technical analysis. We look at the chart, the initial stages of a next trend or a new trend, right? And let's start there. We're just going to quickly analyze. This is what we start there. I've really toned down all the indicators so that we're looking at the price. And what I've done, what actually helped this client a lot, was to even take the candlesticks away. So we are looking at a bear chart. We're looking at the easiest or the simplest way that you can see or identify the structure of your market, right? It's simply higher tops, higher bottoms, lower tops, lower bottoms, up and down trends, some ranging here. Because it's a lower time frame, you'll see there's sometimes this noise, the spiking, but still you can see the structure there. You can see the structure there, right? And this is the first thing. And I realized again how powerful it is to just simplify and to practice this, especially the guys that have spent a lot of time studying indicators, oscillators, different methods. Guys, you don't need it. You need one simple one. If you can see one simple method with very, very important, with proper high probability money management. Only one simple one to get this business of yours, to get your cash flow going. To master that one, to practice, so that you can use it. And what I also underestimated, and what I quickly want to mention here before we start, is and that's why I've mentioned a couple of times, study or get a book about the mental side, the mindset of a trader. We talk about it. I tend to mix it in, but I realized I must focus on it more, especially for people who are stuck and who are at the beginning of trading. So that they don't skip the first part, they don't skip the structure part. The way we think about different things, I've actually discussed that in a webinar last week. And if you haven't got it, if you didn't see it, please send me your email or send me an email, then I'll send you the link. about building the process of building a mindset, a trader's mindset. How do traders think? How do traders think about losses? Is a loss a good thing or a bad thing? If you associate a loss with a bad thing, then you've got a serious problem, because losses will occur. If it's painful for you, it's going to interrupt the consistency. It's going to make it difficult for you to be consistent, to make a net profit over a series of trades. Right? There's a couple of issues that I'm going to address there, and I'm going to have a follow-up one. A part B of that same webinar, where I'm going to focus. I focused about the broad process. That's not 5 steps, but it's 5 phases you go through. The beginning, knowing nothing, and so on. But once you get to know this, and you realize, okay, this is about the structure and so on, then there's a good chance that in your mind there's a couple of things you believe about the market, like about losses, like about leaving trades open, like about when do you take the risk? Am I predicting the market or not? Things like that has a serious or amazing influence. And then you have to work at first. And there's a special way that you can do this. The easiest one for me personally, anyway. I know there's a couple of books about the mindset of a trader. Is this trading in the zone with Mark Douglas? The exercises that he has at the end. And you can even go on Google if you don't want to buy the whole book. Just Google about those exercises. It's really, but I do, if you find value in it, support the guy, or support these people, and buy the book. But yes, it's critically important, guys. You can have a simple, well-defined method. You can have a good, high probability money management or risk management strategy. But if you can't apply that consistently, it's going to help you nothing. So even this that I'm demonstrating to you, if you cannot apply this consistently, then it's not going to help you. So it's important to look at those things. Like I said, I've been discussing it, but it's like in between things that I mentioned in my webinars, in my training with other people. But I've realized it's such a big issue that I'm focusing on it, make people aware of it. All right, let's see. We can identify the structure here. Right, that's always the first step. Identify the structure. If you can't see the structure, then you are lost. Right, we zoom back a little bit, not too much, just to be able to see the consecutively higher tops and bottoms. Right, as you can see, there's sometimes a bit of interpretation, but if you zoom back, then you see the overall trend. That's what we want to see. Let's look at another one. This is the USD, Aussie USD. Let's just draw in the structure. Again, the same template, just absolutely simplified. Absolutely simplified. Right. There was a downtrend. There was some ranging. Remember, this is the 1 minute. There's lots of noise, but you can see. You can start seeing them. There's a beautiful downtrend. There's an uptrend. There's a downtrend. There's some noise there. Over. All right. So let me just quickly see. I've also got one screen, so I'm just going to check the questions now and then. If you've got a question, please put your question in there, and now and then I'll check, and then I'll try to answer it. Afterwards, I'll also have a question and answer session. Right, so just want to check if you guys are still listening. Can you see what I'm seeing? Can you see the structure that I've drawn in here? Does it make sense to make it simple? If you can see it, just type yes, please, so I get some feedback from you guys. There's 14 people here attending while we're waiting for some feedback. That is one of the amazing things. Hundreds and hundreds of people register, and only a few people come and watch. So I don't know why the guys registered, but anyway. So I see Bruno, I see Ahmed, I see Edward, I see God's Power. That's an interesting name. Idar. Can you guys just respond, please? Come on, don't be shy. I've actually tested to see if somebody wants to speak, to give somebody if you've got a good question, to put some variation into the webinar. But seems all the people are too shy. Nobody wants to speak. I need some yeses before I continue. Can you guys see? I know you can see my my chart because I've got an audience view here. So please just type in yes if it makes sense to you, if you can see the structure of this market. A little bit zoomed back. Okay. Yes, one person said yes. Ah, another person. Ahmed, thank you very much for responding. Looks like the other guys are too shy to respond. Okay, so let's continue. I want you to be able to see the structure, because if you can't see the structure, then you miss a lot. Okay, so now what I'm going to do is we're going to wait, see in one of these opportunities, one of these time frames. Let's quickly draw it in on the Aussie USD as well, or the Euro USD. Sorry. Let's see what structures we can see. And when you identify the structure, then also we'll be able to see how the indicators here, in this case, is 34 and 15 simple moving average. They can help us, but they can also confuse us. You do not look at the indicators; they just help you as you focus on the price. Because if you focus on the indicators, you get lost very quickly. I've got a nice uptrend here. False break there. Let's change this one there. I've had some feedback that guys said it is useless for them, or they feel anyway that it's useless to draw in these lines because it's after the fact. What I want to tell you is that as you draw these things in, you're building a template in your brain. You're learning the structure of this market. If you can't see it on the old charts, then you will get confused when you go to the right side of the chart. That's the purpose of today. We're going to look at the right side of the chart. We're going to look at a couple of ones where I put when I see a good opportunity, I'm going to put my guideline. Let's put this one there. And I've had other feedback as well, where guys says, no, but I would have drawn it different. Yes, you will draw it differently. This is where the art part of trading comes in. It's not just a science. If it was just a science, the people that are maths and science geniuses would have become very rich very quick. But and sometimes some of them might, but not from the pure maths or pure science part. There is a bit of art there because it's human behavioral patterns. It's people's emotions all mixed in here. We're looking at almost a map of human behavioral patterns. People buying, selling, the basics, supply and demand in action. People buying and selling. All right. So there we've got a structure. Let's change this chart so we can see if there's any opportunities. Right. So what I see here is there's an uptrend, but this is not nice. There was a lot of movement here. It was broken. I can actually, if I go on this side, I can probably say that this is an uptrend, up, and there was a break. Huge candles here, or huge movements here. Can you see what I see? I see a established uptrend there. I see a break. I want a break below that and a pullback. That's our moving average spring strategy. We're not going for the first impulse wave. That's a failure swing. We're going for the second one. So we had a swing. It couldn't go higher. So this is our first impulse wave. This is not what we're looking for. We're waiting for a break through this trend line. It's broken through. We want to pull back. Right. Now, very important. We've simplified it. We can see the structure of the market now. But we need to know the emotion of the market as well. But when? So when this thing breaks through, and I'm satisfied that it has broken through, I'm going to draw a little bit up there. Then I go to my candlesticks, which shows me the emotion in the market. Right, that was our first swing update, which broke up too high. We're waiting now here for a swing down and then a swing up. Now you can immediately see some of the issues that you will find in the lower time frames that will pop up as well. I've got an ECN account here. I've got the Aussie USD, and if you look at it's got the ask and the bid line here. If you look at the distance between the ask and bid, we actually want it a little bit closer. because if you look at the wave structure, this is an enormous part of the wave structure, right? So sometimes in the market, this because it's dynamic spreads, it gets a little bit higher. Sometimes it gets lower, it becomes less. So you'll have to just check that out. So right, what we see here, it's going back. I'm gonna drop my guidelines here. Here's the last swing high, swing low there, and if it gets back here, I'm going to enter into a sell trade here. I'm satisfied that it swung, it went lower, went up. I'm going to sell here. Very, very, very important. I'm in a demo account and I'm testing. There's no mental pressure here. I'm testing, guys. Remember that in the beginning. We are laying down information in our brains. We're focusing on the process. We're not focusing on making money now. So that will come when you've practiced enough. It's also going to work very, very from low, from low lots upwards. You cannot jump. If you jump, you're trying to force your brain to do something that is not prepared yet. It's like going on a bicycle and trying to jump with a bicycle when you can't ride properly. You're just going to get hurt. In this case, your account will get hurt. So in this case, what I do, I've got my stop loss that I'm going to place there. I'm going to take my final take profit there, and there we are going to take partial profit. And now I know I don't even need the candles anymore. So I'm going to go back to simplify. I'm going to go back to let me maximize this chart. I'm going to go back to line chart. Again, the reason for this is to simplify. I'm not going to panic now, but what's going to happen. I've decided this is a good setup. It broke through, made a pullback there. There's my entry. I put my guidelines. There's my entry. There's my stop loss, and then I'm going to take half of my profit, and then I'm going to take all my profit. The rest is the profit. The idea is, if you listen to my previous seminars, this is a high probability risk management. So there's a high probability for the market to move a little bit in my favor, and then I take some of the profit off. Not everything, some of it, to make the mental pressure less. Actually, when I take half the profit here, it means that it's a break-even trade, right? And then it's easy to allow the market to play out. Okay, let's just see if I see some questions there. Bruno asked, what is the structure? And if this is a live market, this is a demo account. I always practice on a demo account with guys that I train with, because I want them to focus on the skill. I want them to understand the structure of the market, not on are we making money or not. That's actually very dangerous if you start practicing a skill and now you're already wondering if you're making money or not. It's going to distract you from what you should be doing, right? And it can actually cause a lot of bad habits as well. So yes, so this is a live price here. It's on a demo account. And when I talk about the structure of the market, okay, this trade is in. We'll see what it does. I'm just going to put an alert here so it warns me. So the price get there and I have to close it, or close partial profits. But let me, before I jump to, I just want to show Bruno the structure of the market, what I'm talking about, in another slide. So I'm going to take partial profits here. I always have a lot of questions there. Can you take partial profits? Yes. We've got 0.04. That's our open position here. If the market gets there and I want to take partial profits, then I want to close half of it, 50%. Right. So let me show you how to do that. You go to modify and you go to market execution, then you specify. I want to close half in this case. Now I'm going to leave it here. And if I hear a ding, if my platform warns me, then I can just come down and close this. I'm going to also put a ding here. So if we have to protect our account, very, very important. If it's a good trade, If you saw the structure of the market, you waited for the initial stage of a new trend. If you knew, you had your method, you knew where to take your, put your guidelines, where to put your entry, where to put your stop loss, where you protect your account, where to take your profits. Everything is sorted out. This is nothing emotional. This is not something I'm experimenting with. I've practiced this, right? And we're practicing the spring, moving average spring strategy in this case. Then even when it hits my stop loss there, then it's a good trade. I followed my plan. Very, very important. It's a good trade. If I make profits, it's wonderful. If I have a loss there, it's not bad. It's a good trade. I protected my account. I'm going to tell you a story now about a guy that decided to trade without stop losses. And so this is now done. It's going to alert me when the market gets there, also when it takes it out, and it's going to be a good trade even when it takes me out because I protect my account. Right? What is a bad trade then? As a trade, a bad or a good trade have anything to do with a stop or a profit or a loss? No, nothing. Absolutely nothing. Did you realize what trading is all about? A good trade is simply when you follow your plan, you protect your account, you manage your profits, whatever. It's good. A bad trade is when you mess with your plan, when randomness comes in, when emotion comes in. And that happens a lot when people trade with too much of their account. So small parts of your account, and there's not a lot of mental pressure. Right, as I said, this is the things I discuss in more detail in that other building a trader's mindset. Bruno, let me just go and show you here. All right, let's see if I can find the slide about the structure of the market. But there's not a very nice one here. This is it. Right, let's just go one back. Right, the market has a structure that you have to see and understand, just like light waves have a structure, ocean waves have a structure, sound waves have a structure. The market also has human behavioral patterns, people buying and selling. There's a structure there. You have to understand and see that structure because that's what technical analysis is at core. We look at these charts, we see the structure, and we wait for a initial or the early stages of a new or next trend. That's what the risk is. The risk reward ratio is the most in our favor. The risk we're taking small compared to the possible reward that we or profit that we can make. Right, there's a flow and a rhythm. Ocean waves, market waves, electric waves, sound waves. There's a flow and a rhythm. That's the language you learn to speak. Right, and this is a very good summary of. I've just actually simplified it even more. I make it in a line chart. That's what we're looking at the charts now. But you must be able to see the structure. There's up trends, downtrends, uptrends, downtrends, uptrends, downtrends. That's the structure. And the initial stage of the next trend, that's where we look for possible entries. All right. I hope that answers your question. Let's go back to see what our trade is doing. Right. Now I want to say something interesting here as well. Yeah, I think we had a quick drop there in the internet. It warned me about a possible drop. Right, can you guys still hear me? Can you see me? I just want to make sure. Okay, Bruno says he understands. I'm glad, Bruno. Like it. Now I just want to make sure. Can you still hear me? Can you see me? Because of this drop, I'm just a bit worried. I always have a backup anyway, so don't worry. But I just want, yes, Azai, Ahmed, thank you very much for responding. So I'm sure that actually happened on my first webinar that my backup wasn't in place and it dropped, and it took me about 10 minutes to get up, back up and to continue. So these days I'm a bit quicker. Right, thanks for responding. Okay, so there's another question here. God's power. So this webinar is on moving averages. My question is how to determine trend reversal using moving averages. Right. God's power, that's the reason why I tell you that the question is focused on the moving average. Yes, the moving average can help you to see it. You can see here there was a cross of the moving averages. But if you're going to start focusing on the moving average, then you're going to get lost. For instance, what's doing here? What is it? Is it up, down? The price is spiking back. What do we do here? It's the moving average should only help you. What you need to see first, and that's why I've made them smaller here, is what is this market structure? What is it saying? Because if you see the market structure, then the indicators is like a visual aid to just help you. And in the beginning, what people tend to do is they tend to focus too much on the indicators. They lose sight and they get very, very emotional. They lose sight of the market structure. And to make a net profit over a series of trades, if you cannot see the market structure, is almost impossible. So there's a randomness because all indicators and oscillators are delayed. So, and that causes havoc. So it can help you when you can see the structure and not. It's just I'm gonna follow what's happening with our trade. Yes, we've got our trade open trade here. If you've practiced it enough, there's no emotion. It's going to be a good trade because I'm not gonna I'm going to allow this trade to play out. So I'm not going to move my stop loss. Oh, we have been taken out. I'll say. So it moved up and took out our stop loss there because of these wide spreads, right? And it's done. Okay, it's a good trade, guys. It's a good trade. We're looking for a net profit over a series of trades. Now it's gone here. You can see the next part of the structure forming already here. Lower bottoms, lower tops. But for us, we're done. So let's see if we can find another one. Here we see higher tops, higher bottoms. So we leave that one. There we unfortunately missed a little one there. It was a higher tops, higher bottoms. It went down, went up. There we should actually also, we would have been stopped out. All right. So what have we got here? We've had to protect our account. Let's just look at the emotions here. Yeah, might have just not triggered us there. And then depending on where you put your stop loss, yeah, I usually put it a few pips behind the where the wave structures, especially on the lower time frames. Right, and there it went down. Again, that's going to happen. That is going to happen. That's why it's very, very important at the initial stage of the next trend. The risk is small compared to your profit. You can have a few losing trades and then have one or two positive trades, and you're done, break it even, and you need just one or two more profitable trades to reach your target or whatever your targets are. Right. So we haven't got a good trade here. Hopefully we'll get another one, another chance, so I can demonstrate to you guys. Now what I wanted to say here while this trade was open is while it's open, especially when it pulls back. In the beginning, because guys haven't practiced this good enough, the emotions is just almost, they can't not mess with the trade, right? And that's a mental thing. That's because you still associate loss with pain. In this case, we were taken out and it's still a good trade because we protected our account. We never know what's going to happen. We just simply look. We take a calculated risk when the market gives us an opportunity. And in the lower time frames, we know there's a lot of noise, it takes a lot of practice, and you have to be mentally very prepared, right? So let's see. This one stopped us out, and it's continuing here. Right, let's see if there's some other questions. Right, there's another question about the time frames, which time frame is the best. There's not a good or a bad time frame. Higher time frames, lower time frames. Let me just, while we're waiting there for another setup, and after this, if there's not one, I'm going to go to another currency pair. From the 1 minute up to the 1 hour, we call the shorter time frames, right? And from the 4 hours until the monthlies, we call the longer time frames, right? Now, in a longer time frame, there's more people involved in creating these candles. If you look at there, if this was a daily chart, then every one of these candles represented a day, the days of action. There's a lot of people involved. The structures, the market structures in the dailies are a little bit more stable, right? The higher time frames. But the disadvantage is there's not a lot of opportunities to trade. You're lucky on a 4-hour chart if you get 1 or 2, perhaps a week. On a daily, 1 or 2 per month you might get. Obviously, depending on the method that you use. But on the lower time frames, there's more noise because there's less people. We're looking at the 1 minute now. Every candle here represents 1 minute. In the market, people interacting, obviously there's not a lot that can participate in 1 minute, or less than the higher time frames anyway. So there's more noise there. A big player that opens a big position has a bigger impact on these candles. So there's what we call noise. This is the noise we were taken out actually with the noise movement here. And I actually saw I made a bit of a mistake. Normally when I put my stop losses, I take the spreads into account, and I put a little bit wider for the spread's sake. So but still, it was a good trade, right? So there's but on the lower time frame, sorry, just to finish that, on the lower time frames, there's much more opportunities, right? So as you master this, seeing the structure, you've got your method, you've got your money management, you're thinking properly about the market, you're thinking properly about losses, about when to enter the market. You practice that, then you are allowed. Obviously you can start practicing on lower time frames as well, and then you get much more opportunities. So I've got the one gentleman that I always tell the people about, a gentleman that sits in Switzerland. He's a master trader. He knows this. He decided he doesn't want to sit in front of his computer so much. So he went to a very small, like a 1 minute time frame, and looked for a market that's very trends very nicely. He chose, I think, the Nasdaq, and then every day, just after open, he sits there and he looks for this market structure and takes a couple of trades. He's got a huge account, trades a small amount, and makes his profit, and he's done for the day. So an hour and a half a day. That's it. So that's what you can do when you master this, right? When you're thinking properly, when you're thinking like a trader, right? Okay. Now let's look for. I want to demonstrate to you. There we've got a downtrend, lower tops, lower bottoms, and it's breaking out. Looks like the Euro USD is going to give us an opportunity. It's breaking through, so I'm putting on my candlesticks. I want to see the emotion of the market now. This exercise that I'm doing, and remember, we're in the lower time frames now. This is what this is about. We are practicing. And the 1 minute is this. You can easily see, even if you don't have a lot of time, you can see the ebb and the flow of the market developing here. So it's also a good place to practice, right? Yeah, can you see what's happening there? It's breaking through. If it pulls back now and it starts pulling back, then I'm willing to start putting my guidelines there. Okay, this is actually when we start practicing, or what I've decided to do when we start practicing, when I work with people individually. What have you been doing up to now? Let's learn from the mistakes. Overlay, go back to the structure. Where was your trades taken? And then you practice, right? I'm actually bringing the mental part in more strongly because I realized after the other client how important that is. And there's a good chance I'm gonna make a few adaptations to my seminars as well, because that answers some of my questions about why so few people come back. It's like there's just too much confusion. Right, what the market is doing, it hasn't pulled back enough for me. Looking at the market structure here, you can see those wave patterns. Here you can see them a little bit. You can see the emotions there. Is it down, pullback, down, pullback? So I'm waiting for one of those pullbacks here. I'm using that structure, that pullback, to define where I'm going to put my entry and my stop loss. Now, I already had a few questions about this while we wait here and see what happens. Is in the beginning, I know it's tempting to just take a method like I've explained my moving average method with all the 4 indicators, and to just say, okay, now this method is going to make me rich. I must just practice this and then I'm going to be able to do this. Nope. Just like I said, the method is just one of the pillars of that foundation. The pillar, the foundation itself is still the structure of the market. And unfortunately with newbies, especially if you've got, you feel like you want to make money, you wanted to make money from yesterday, so you put a lot of mental stress on you, then let's see what happens. Does that qualify as a pullback? It's a little bit short, but I still like it, so I'm like a 0.21 here. I'm not focusing on lot sizes here, or lot sizing. We're just looking at the execution of a proper trade. The early stages of the next trend. Is this a proper pullback? Some might say no, it's nooks and crannies. Others will say yes, it's enough. That's going to depend on you. That's why you have to practice and make this your own. For the sake of this practice, I'm going to say that is a decent pullback, and if it goes up now, I will enter there with a buy. What I can do, because I've changed it there, I've got a shortcut here that I can actually place the buy order there and then just drag it. Right, can you see what's happening here? It's pulling back, so I have to adjust my stop loss. Move the stop loss here. Now this would have had a profound effect, and actually I would have had to cancel this order if I drag this, because with lot sizing you have to do the lot sizing all over. But in this case we're just practicing the execution, so I'm going to leave it. Right, in the meantime, let me see if there's some questions that we can look at. No new questions. Come on, guys. You must have questions. That's another interesting thing that I think of now. We are waiting. All right. We're waiting. We've got an order in. We haven't been triggered yet. Do you understand the importance of patience? Not jumping in. I didn't think while it was going up, and it happens a lot. If you're emotional, it might go up now and you enter, and then it doesn't, it goes down. Where do you cut your losses, right? That is not that's a bad trade. There's no planning, there's no structure, there's nothing that you've practiced over and over again. That's called random trading, and it will destroy your account. While we're waiting, I'll tell you a story about I got a call from my account manager that said, please can I speak to one of his clients? The guy is very distraught. So he put me online. I got onto a Skype call and we talked, and I asked him, okay, sir, what is wrong? He said, I don't know what to do. I had a small account and I faithfully built it up, managed my risk and everything. and I actually tenfolded it over a couple of months. So it's a live account. I practiced before the time, and then he decided that now he knows what he's doing now. He's going to take larger risks with his he's going to use larger portions of his account for the trading, more mental pressure. And what happened actually was there was I think it was an oil price. It looked like it was going up, and he felt, no, it's going up, and he took a large position, and it started going down, and he started averaging down. That's not good. You must protect your account. In the end, the net result of he's not using a stop loss and trading, with thinking, trying to predict the market instead of just listening to the market, looking at the structure, is that he was in a position that he had an open loss with 90% of his account. So he had only 10% left. Obviously, he was distraught. It's a lot of money, months of work just almost down the tubes. And but that is the effect of not protecting your account, not using stop losses, not deviating from his structured way. Can you see what happened there? The market started moving up. We've got an engaged position. We're dropping our stop loss to protect our account if it doesn't go further. And we're going to take our profit there. Right now, we're going to take 50% of the profit there. So we modify. This is a short time frame, so I can do this. I can wait. If it's a longer time frame, we do something else. Okay, market execution, and we're going to close half of that trade. Full trade is 0.02, and you can see that. And just take it out of the way there. Let's use a alert there. What's nice about the alert is that even while you're practicing, you can actually go to another screen, do something else. You're just waiting for the ding, waiting for the sound, and then you can come back and close. If it's a higher time frame, what I do is I split my account in two. I would have had two 0.1, 0.1 here. Both of them stop loss entry there, stop loss there, but the one take profit there and the other take profit there. So then you can leave it. Then the trade is in. You only have to monitor it every couple of candles. Right. Excellent example here. It's drawing back. Is there something wrong? Is there a conspiracy against us? No, there's not. The market moves in waves. This is just part of the wave action. Right. If we follow the structure, if we take trades, the initial stage is the next trend, then it is possible to make a net profit over a series of trades. The mental part is you take your eyes off. We don't care so much about the outcome of each individual trade. It's about a series of trades. All right. As you can see, the spread is very low here. Euro USD, it makes it a little bit easier for us to manage our position than the previous trade. All right, let's see. No overtrading here. No impulsive trading. We see the structure. We put our guidelines. That's our method. We apply our method combined with our money management. The mental part, a loss is not bad. It's protecting us, our account. If you can make a series of good trades, then the possibility is high that you will have a net profit over a series of trades. You get that consistency that the guys talk about. If you're not consistent, you get random, then that's exactly what happens. It becomes random. Your emotions interfere the whole time. The mental pressure gets more, and then one of two things happen. You either have a lot of losses or you have a lot of wins and then you give it back again. So like that other friend of ours or the client. Well, what happened to him anyway is he asked me what must he do. I told him I can't tell him what to do, but does he want to protect or does he want to have anything left? You know, that 10% of his left. He said obviously. He said then I suggest that you trade, you take a, see there's a, a little bit of that was mixing in there. Then you obviously have to close some of your position. In the end, he started closing just to create margin, and he could have lost everything, but he managed to save, I think, about 10 or 20% of his account. And then we spoke afterwards, and he said that he never ever wants that to happen again. Right. So now he's practicing, and he's using small portions of his accounts, and he's protecting. He's using it, looking at the structure of the market. He's taking a calculated risk at exactly what we see here, the initial stages of a next trend. There was a downward movement, lower tops, lower bottoms. There's a break, breaks up. It doesn't make a lower bottom here, and it starts going up, and that's a signal for a possible early stage of a next trend. We took our risk there. We have relaxed. We've practiced this. It's always a small part of your account. I remember when my mentor, the first guy that started helping me with my foundation, when I looked at the trades, he took it's like huge amounts with every trade, and he said, "Theunis, beware. It's still only a small portion of my account. I've only built it up over years, so it's still only that 1%, 2%, the risk that I'm taking. The mental pressure is low. You get used to it. As you practice, your neurological pathways, the trees and networks get bigger. And just like riding a bike, just like driving a car, just like any skill, it gets easier. But there's no shortcuts. You must practice. Okay, I see our time is running out. Let's see if there's any more questions. There's some questions. Let's see. What is the essence of the moving average? Because all examples you use the support and resistance. If half profit is taken, will it stop there or continue to take full profits? Right. Ahmed, we don't know what's going to happen. We're not trying to predict the market. We never know how far the market is going to run, and that's the point. That's why we let the market show us. Is this the initial stage of the next trend? Yes, we take the risk. No, we wait. And then we use a high probability money management or risk management. There's a high probability the market will go a small part in our favor. And remember, the moving averages here is an aid. But I'm actually looking not at support and resistance. I'm looking at the structure of the market. There's a downward movement, more sellers than buyers in the market. Something happens there. We are not sure what. We don't care what. We can see there's something happening, more buyers coming in, right? And then sellers try again, for whatever reason, we can see that they cannot take the price lower. That means there's a shift in the balance between the buyers and the sellers, the bulls and the bears. And that's why initial stage of the next trend, we take a calculated risk, right? So the moving averages doesn't tell us anything. The moving averages helps us to see the structure of the market. And I for a purpose, take the candles away so it doesn't distract us. We've seen the emotions of the market. We've taken our trade. It hasn't taken our first take profit yet. We don't care. We're going to protect our account with each and every single trade. I think what I'll do before I finish is just go through the structure to show you how many times this happens. And that's why with the practice, you're gonna decide where you put this market structure is going to show you where to put your stop loss, your entry. And if you practice, then you can see if you put it too close, it's just going to get stopped out the whole time. So the purpose of the half profit taken is to manage our risk, to make the mental pressure less. It is a high probability for the market to give us some profit. We take some of that profit, not everything, not all the whole position. We leave some open for the market to actually reward us, or to, if the market decides to continue, we never know, then we can make more profit. And we need that more profit also over the long run to make a net profit over a series of trades. The bottom line is the managing your risk. Okay. Okay, there's no more questions. Yeah, the market doesn't make it easy today. So for some reason, we don't know why, the buyers are having difficulty coming up there. Now, that's just one thing I want to make. You said support and resistance lines. Support and resistance lines, oscillators, Elliott waves. There's 120,000 theories, ways. If you study one, if you get a doctor's degree in one, it's not going to help you. Right? Technical analysis is about technical analysis, about the structure, seeing this structure, seeing this ups, downs, uptrends, downtrends. We know why. It's supply and demand in action. Right? So let's see if we can close this one out. At least at our initial take profit. Right, hopefully you can see what I'm doing. I'm trying to make it simple for you guys so you can go and do it at home. You can go and test, you can go and learn. Like I said, learning a language, this is now where we're dealing with the poetry. You have to understand the nuances here. You have to practice a lot. The hard time is a bit easier, so that's where the language is still basic. Right. Always when you begin this practice specifically, begin on the higher time frames. You'll see the structure is just much more easy to identify. As you master those, then and you've got the time, yes, you can start practicing seeing the structure in the lower time frames as well. There will be more options. There will be more opportunities. All right. Okay. Got a couple of more minutes. Let's see if this one goes to partial profits or not. Hopefully you can see what I'm doing. What my purpose was for this webinar is to demonstrate to you the structure is there. You are able to take it. Moving average spring strategy in this case, I've totally taken the focus off the indicators, but there you can still see there is some indicators there, and they help you to see the structure, but they mustn't take your eyes off the structure. Right. Okay, while we wait here, the time is running out. I'm going to zoom back. So going to the back part of the or the historical charts, the old charts, which they call them. This is what I mean. It's not support and resistance line. This is identifying the structure, the up, the down waves. Oops. Okay. Can you see there? Breaks through, comes back. Breaks through, comes back. That structure is the one that allows us to make a net profit over a series of trades. Right. Goes down, breaks through, pulls back. That's what I mean, with the structure of the market. That's where we take our calculated risks. The initial stage of an next trend. Initial stage of a next trend. Obviously, in the lower time frames, just a warning, there's certain times that you want to get a trade. For instance, this is 3 o'clock in the morning. This is during the Asian session, so there's not a lot of liquidity, not a lot of people buying and selling, and you can still see the structure. If we go to the Aussie, which is open during those times, and we go to the early morning hours here, you can see there's more because it's part of the Asian session. You can see there's more liquidity here, and you can see the structure. Right. So you can see the structure, you can see the early stages of the next trend, and you can choose a method to apply there. That's what I'm going to try and do in the next few sessions in this also, is to help you guys to apply it. We go back, measure it, and we see if we can't get a few, so I can demonstrate to you how to enter into these trades. You enter there somewhere, you've got your stop loss, and you let the market play out. You can see what's happening there. You can see there's an upward move there. you can see there's a downward. You can see it in the old charts. If you practice there, you can start seeing developing on the right hand side of the chart as well. Okay, let's see what's happening. The market is not friendly today. Not a lot of buyers getting into the market there. And still, if we decide to stop this trade out, we've lost nothing, right? We are inside what we call the language of the market, listening to the market. Okay, I'm going to stop this trade out, and we are done. Just a last check if I see any questions, and then I'm going to log off. Okay, let's see. No, seems like everybody's satisfied. I'm going to quickly put up my email. Any questions, please email me. Here's my email. Sorry. Let's go back to the Here's my email. Please email me, and we take it from there. You don't learn a language in one session. This is just a part of your training, part of your journey. Very, very important. Okay, thanks for listening, and have a nice day.